Hey everyone, this is my weekend video. Please, before I get started here, please retweet me on Gumby9662C on Twitter if you can. Retweet this video if you get a chance. I will have it posted on Twitter. And if you're not following me already, please follow me. Please like the video if you like it. And then also, if you're seeing things that I'm not seeing, I really appreciate all those extra comments I'm getting at the bottom. I keep the few comments I am getting. I am making changes to my videos constantly to analyze that situation. So to get into the video, I'm going to base the video based off of the economic cycle chart here, and exactly where where we're at in this economic cycle. Trying to get an idea of what we're doing here and everything. So basically, what I'm thinking right now. So we had two main themes going on this week. Or last week, we had the financials, okay, guys, and then we had the industrials. And so basically, two main themes were going on, especially there Friday or Thursday, last day of the week. And so basically, what we saw was in the financials, of course, we had some mixed results. We had JP Morgan get crushed. We had Wells Fargo get crushed on their earnings. Not really too far outside the expected moves. So that was a good sign. Okay. So, so that suggests to me it wasn't, they didn't really do anything that was way too bad, as far as reaction to the news. The news was good enough for the financials, in my opinion. And then we had like Goldman Sachs and Citi. They initially bounced up on their earnings. Their earnings weren't that bad on the financial front in all, just the mortgage side. So just keep that in mind going forward here. So and then so basically what a lot of traders were predicting is, like this chart is predicting right here, that we were entering the early recession phase of the market cycle. Okay, so you got that whole group of people think that we have peaked out on the markets, and we are entering early recession phase on the financials. Well, I would have been a little bit more confident in that scenario if we would even had a more dramatic sell down in the financials. Um, so I don't know for sure about that if we're in that case. On the other page, we got industrials. A lot of industrial data coming out this week. Okay, this coming week, and so they were bidding up these industrials big time going into next week. And so we got a whole nother camp of people thinking we're not this far along. We're still in the full recovery phase. Okay, and so they're thinking we're more like in this zone here, and energy still got a lot of room to rumble here. Okay, that's what they're thinking here in this phase of the markets. Okay, so you know or see you know see that blue line right there. This here represents what we're currently in. So materials and energy is in an upcycle right here. Okay, and we're going to peak out late in that scenario. But they are buying up these industrials, thinking that we're not quite there yet. That we're actually they still think that we might be still in the market top phase, or before, or still have not topped out yet on the industrials. So that's the only thing that makes sense to me why these industrials were catching such a strong bid this week. Okay, so just keep in mind we got two camps, different camps here going on here, in getting themselves all stacked up for this week's trading. So a quick rundown of this week's activities. Okay, guys. So we do have Halliburton earnings this week. They represent almost 25% of the OIH energy ETF. Okay, so just keep that in mind. You can either trade out a Halliburton or OIH because it's such a huge weighting in for that earnings play. If anybody does trade earnings, I personally don't. Okay, so this is a major heavyweight coming into this week. So definitely keep this one on watch. Then the next heavyweight would be Tesla, and that is your second biggest holding in your XLY, okay, Consumer Discretionary Index. And I'm going to show you Tesla is, if we are in the early recession, Tesla, there's a lot of risk for Tesla. Okay, so I just want to float that. I mean, I know a lot of pundits out there say Tesla can never go down, but I'm in the camp that Tesla that there could be technically on from the charts it's it's really extended still. So that's a major dangerous situation we got possibly going here on Tesla. So especially with if we are early recession, money's coming out of any type of tech related stuff. So because that graph clearly showed you earlier that the money's going into more defensive areas, and Tesla would not be in that camp as a defensive play. Okay, that's a pure growth play, and so we're really uh it's a really dangerous situation. Okay, and J&J is your top one of your top holdings in your XLU. Okay, and I think that's right. Is it XLU? Yeah, or XLV maybe. I think that's supposed to be XLV. J&J is supposed to be is a top holding in XLV. I'll have to double check it, but I'm pretty sure that's what it is. And then you have Alcoa, and I want to point out also we're going into this week. The XME, that's your metals and mining index, has given nothing back in any time in this recovery. We're at all-time highs on the metals and mining index going into earnings season this time. Now that goes in line with the materials. Materials being in the bullish phase for the last leg in the early recession. So that plays right into that thesis that we're into early recession, and this could go a lot higher for longer here on your XME index in Alcoa. So they were literally loading up on it Friday in Alcoa, just Friday, preparing for earnings next week. Okay, and then you have Bank of America reporting Monday morning. That is one of your biggest one of your large holdings. That's like your third one, I think, third largest holdings in your financials index. Okay, guys. Okay, further down here, I got the economic calendar right here real quick. I'm going to go through real quick here. The reason I think we're gapping down Monday, two reasons. One, you got China GDP and industrial production that's going to hit the tape Sunday night. Okay, so you're going to open up the future Sunday night. China's going to come out with their data, which, if anything, things probably have gotten worse in China than better with all the COVID outbreak. Okay, and then in addition to that, Europe is closed. So if U.S. futures get drove down by Asia, there's no European that's going to come in and bid up the price in the U.S. futures. So just keep that in mind also. And then on top of all that, you got Bank of America, which has a lot of mortgage exposure. With the interest rate, all the interest rates going crazy here. Uh, they're reporting Monday morning. So I think we're gapping down 30, 40 points or so on the SPY or the SPX. Um, so just remember this. That's what I'm thinking here. So you got the interest rate minutes coming out for Aussie dollar. They've been raising rates. Or they've been leading the charge with rates pretty much around the planet. So good chance they're probably gonna have another rate increase. Japan industrial production. See this one here, that's what worries me because everybody thinks the industrial is just going to have this really great quarter, and they might, but this is worrisome. You got industrial production out of Japan, and we know just a few weeks back they shut down all of mainland China Toyota production for at least a few days or a week, just a couple weeks ago. So I'm thinking this number's probably going to come in light or very weak, and plus their exposure to China with most of China being shut down. When China is in technically a recession right now, so I'm actually expecting that to be weak. So that's just pretty much my take on that. You had building permits. You got all the crazy stuff going on with the the bonds and interest rates right now. So it's hard to say what's going to happen with that. And then here's another thing we have to worry about though. And if you're thinking, you know, you want to try to give pretty good grasp of what you think is going to happen with the markets. This is another wild card. You got the People Bank of China. They've been actually cutting interest rates. And every time they do that, we come in, we get a big short squeeze in our markets. So that's something we have to worry about here on Tuesday. Tuesday night. The China's going to come out and possibly cut interest rates again because they're in recession. Yeah, so so you want to get very, if you're wanting to be on a one side of the markets, and then you got the situation going with China. Yeah, it's just so difficult to do. There's just so much. That's why I'm sticking with day trading. It's just so difficult to figure this out. Okay, you got PPI month and yearly PPI for Germany coming out Wednesday. Uh, uh, that's producers prices increases. Okay, and then so that's your final price increases for assembled goods. Okay, so that's good. That's your end consumer prices coming in, very important. Okay, this is more of a lagging indicator, has been a lagging. PMI's your uh 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 your initial uh read. PPI is your lagging indicator going out to the last one that comes out going out to the final consumer. Okay, so that's really important, especially with what's going on with all the energy and everything in Europe. Europe's in shambles right now because their energy is just through the moon right now, energy costs. Okay, uh, then you have consumer price increases out of Canada, and then existing home sales here in the United States, and your beige book. That's all on Wednesday. Okay. We have a holiday in Brazil on Thursday, Euro CPI, so the Eurozone consumer price increase. So you're going to get a really good read of how much prices have gone up in the entire Eurozone, month on month, year on year. Likely to be horrible. So just keep that in mind here. U.S. Philly Fed manufacturing and employment. So, you got that going on as well. Okay. And so keep that in mind. Also, you got industrial data coming out Thursday, which, depending on which side of the coin we're on here, employment's, getting better, seems to be getting better every week. You know, uh, you know, you would think that this is going to be a fairly, really strong number here in the United States. So that's the bullish case going into Thursday. So I'm thinking what we're going to see is an early sell down in the markets, and they're going to bring it back up in towards the end of the week because they don't want to be too short into this manufacturing data. Okay, you got retail sales out of Great Britain. Friday, you have German manufacturing PMI. Uh, that's a eurozone. Yeah, it's a eurozone figure. Okay, you got Canadian core retail sales, and you have U.S. Manufacturing PMI and services PMI. So you have another big time manufacturing data component into the end of the week. So some quick takeaways from Friday. The worst of the worst for Friday, that's your semiconductors. 10 for 10, declining. Nobody wanted to touch semiconductors into the close. That's your growth sector. So that suggests if we're going into the late stages of the cycle, that you're going to start seeing companies going into this earnings season. Uh, they are going to cut back on their capital expenditures, okay, to bolster up their earnings and revenues. And we're going to start seeing, that's what the price action is suggesting to us, that the capital investments and R&D investments into the company, they're going to start slashing those budgets so they can, that's how the final stages of a market cycle tend to work. So we have to start looking for that in the earnings calls to see if that rhetoric starts showing its head. Okay. So one of your strongest sectors were your transports, IYT. That goes hand in hand with the Dow and the industrials. And there's your industrials. Like I said, those were some of the strongest things Friday. Another one of your worst sectors, that's your telecommunication sector. Largely, you got Facebook, Google. We do have Snap reporting this week, so definitely keep that on watch. But yeah, definitely another one of your areas very, very weak on Friday. And then we also had our financials very weak on Friday, even though we had an initial pop on Goldman Sachs and Citi. Very weak on your financials, and we do have Bank of America Monday morning, and they tend to trade close to Wells Fargo, and Wells Fargo got hit pretty hard there Thursday. Your XLK, that's your tech in general, really got hit. It's the second worst one for the day. And I wanted to finish this part off with the XME. XME was really strong there Friday as well. Look at it here, breaking out really strong. And we do have Alcoa reporting this week, so it's do or die. Well, this is the area that I'd be least favorable of shorting. Because the pattern is so strong, and the cycle suggests that there could be considerably more upside in the market cycle here in these stocks. So some real quick takeaways here, like on SPY. Like I said, we'll see what happens Sunday. I think there's going to be little to no support in the markets for the Sunday session. And if I'm right, the first part of the week, I'm looking for us to definitely do a at least a solid test of 430. That would be my initial target. Okay, and so bottom line is, my first target would be down to 430 early in the week, and then a bounce back up, you know. And then if they were to start selling off the industrials as well, now that would be bad. That would be extremely bad, which it's hard to say if that's going to be the case because we're gaining so much business from the international community, from well, that's banning Russian participation in the global markets. Well, they have to get those goods and services somewhere. So we are gaining quite a bit of business initially here from all these bans and stuff. So definitely keep that on watch, especially you're seeing that in the metals and mining. But so yeah, well, bottom line is you can clearly tell, you know, if we lose that 430, and that's our expected market maker move low, it could get ugly. Okay, so definitely keep that on watch going forward here in your trading. So to me, technology really looks in trouble, and if they start dumping this Tesla, it could be a bloodbath. So bottom line is, so far this year, yeah, we're down about almost 16% here on the Qs for the year. So I'm thinking at some point this week, if I'm right and they do tank Tesla, that we are going to be 20% or greater at some point this week, retesting these prior lows here on tech at the very least this week. And I got a little different view here. So we're still down 25%, greater than 25% on the year on the IWM. And in my opinion, we're in no man's land in this area right here. Our actual quarter pivot is way down here. Um, you know, uh, well, wait here. I got the wrong time frame. I'm sorry. Yeah, there you go. So I think that's right. Let me double check. Yeah. Okay. Uh, Gotta put this on a different time frame, I think. Year to date percent. There you go. So we are down 11% on the year. I'm sorry. I apologize. But I am looking considerably lower here for that quarter pivot. We have not come down to this quarter pivot yet. So that's what I'm stalking this to the downside here. That would put us down, basically 20% to get that quarter pivot on the year, not from all-time highs on the year. So my final takeaway here is Tesla. And I'm wondering with this growth phase that they've got going on in the auto industry, that there's going to be the costs might be higher than what a lot of people are expecting. And we already know that because of the geopolitical instability, big ticket purchases in as far as automobiles have really dropped off. People have been investing in travel and leisure, and not so much in physical automobiles and stuff. And I have grave concerns here on Tesla that we're going to be coming back down to 780. And if that's the case, we could see a massive breakdown here in the XLY this sometime this week. So yes, XLY, we're just hugging at 20 SMA, and this thing has gone parabolic. This is your primary trend down here, and we have gone parabolic above that. So in all likelihood, You know, a proper reset would put us back down to the 138 area here on that. And here we are at 178. So I just wanted to float those ideas. You know, those are the things floating in the back of my mind. Like I said, I appreciate everybody watching this. That's a little bit longer than I normally like to do this. But hopefully that gave you some really good, what I'm thinking going forward in this market. And, you know, this is going to be an interesting week. I tell you that.